Hello, everyone. Welcome. It's Thursday, 26th of June. So, as you understand, we are at the very end of June. But the important thing is that we are at the very end of the first half of the year. So, we are halfway. A lot of repositioning obviously could be seen, especially now that we have a ceasefire holding, a very fragile one in the Middle East, but holds, at least for now. And especially because we have a lot of uncertainty from the central bank's perspective, geopolitical perspective, Middle East tension, politics as well, Mr. Trump's agenda regarding the tariffs. This is what I am referring to. And all these actually ended up with a really strong first half of the year. The key question now, because we have a lot of assets being either overvalued or, on the flip side, undervalued, the key question is whether the trends will continue. What I'm trying to say is that, as I said earlier, it was in general a really strong and really volatile, obviously, first half of the year. So a lot of assets are in focus. It's not like we are focusing for the second half of the year solely in stocks or solely in dollar crosses in the forex industry or solely in the commodities. Everything has been seen in the very first half of the year, significant volatility, significant changes into the direction. So a lot of basically the attention for the second half of the year, it seems that is shifted mainly to the stock markets. Without, okay, don't get me wrong, I'm not referring that we don't really we're not interested on focusing also on gold, on oil, or forex market. I'm just saying that the stock market has been is in focus, okay. Because we have seen a retest of the highs, so it went back into the record highs, regardless of the anticipation of an easing, more easing from the Fed, etc., etc. So now the question is whether the stock market in the second half of the year could pass the previous record highs. Okay. The same question stands obviously for gold as well. For oil, things are a bit different. It's dependent on the geopolitics. It's dependent on the ceasefire, dependent on the trade deals as well, on the tariff deals as well. But the situation there is more fragile, more uncertain. So oil is a different story. But the key question, as I said, is on the stock market for the second half of the year, because of, as I said, of the possibility of passing, especially the S&P 500, passing the past record highs. I'm gonna start sharing my my platform. In the meantime, I would really appreciate also a conversation with you guys. What do you think? Okay, obviously I'm gonna try to ramp up and overview everything that happened in the very first half of the year and how we could see what we should focus on the second half of the year. But I would like your feedback on as well. Your feedback and what do you think? Your personal opinion, let's say. Now, let me just share my screen. Okay. I would like to start. Sorry for that. Just a second. With the S&P 500, and let me also put the chat on. Welcome, Rapli. Welcome, Ludovic. How do we? No, dear. I don't have. I don't have like personal. I mean, social media exclusively for market analysis other than the companies ones. My role, okay, I understand that you just join us. I mean, you are an HFM, a new HFM client maybe. Basically, my position is a market analyst in HFM. I'm here since 2016, and providing or any market, providing daily analysis for our clients via articles, via social media posts, but mainly via live streamings as well. So yeah, I'm a market analyst. Okay, thank you for your very, very nice comments. I'm glad that you are happy, and I'm glad that you um, um okay, we are, anyway, we are here. This is the our motto, right? Because if you win, we win as well. So our motto is to try and help our clients, because it's a win-win situation, it's a win-win relationship, right? So yeah, but guys, before we jump into the markets, okay, because we start analyzing from a fundamental and technical perspective the markets, obviously you feel free to ask anything you want. But in the meantime, okay, I would like to do a quick recap, let's say, of what we have seen so far in the very first half of the year. Okay, the basically from July up to date. Okay, so I'm not gonna like bother you with details, because we are providing this live analysis every week, sometimes twice a week, and we try to keep you up to date. So I guess you know the majority of everything that I'm gonna say right now. So I would like mainly to focus on what's coming, other than the overview, but very, very briefly, just to remind you that we began the year with Mr. Trump on the lead of United States. Really, really aggressive agenda, tariffs, really aggressive tariffs approach, and you have seen that he has applied some of them, paused them for 90 days in order to proceed with some deals with some countries, and he has actually agreed to some deals. So, for example, with UK, partially with EU. So we're seeing China as well. Okay, they're not nearly there yet, but there was some progress. Japan as well. So what dominated the markets so far in the very first 6 months of the year, it was the tariffs. It was unfortunately the geopolitical tension, and the latest that we had, it was the tension between Israel and Iran and the US. US was also involved. Currently, we are holding a bit of a very fragile ceasefire. We had also lack of clarity regarding the impact of tariffs on the economic data, something that actually affected the inflation figures. And that's why we have seen initially the Fed postponing the rate cuts for the year end. But the latest data releases, I'm not referring only to the inflation, but in general, the US data releases have seen a bit of hotter than expected, let's say, inflation. And that's why we have seen that the odds of a rate cut have now moved forward, and actually a change is expected in September. So it's everything. Is the geopolitical front? Is the tariffs? Is the the central banks, the data. Inflation is really, in some countries at least, is quite stubbornly on the upside. We don't have seen a substantial slowdown, and that doesn't give the room to the central banks, and I'm not referring only to the US, to the central banks, to actually cut rates further. So yeah, we had all this, and basically all this uncertainty. I'm not sure whether I missed anything, but all this led to another remarkable performance so far this year for gold. We end up with a retest of 3,500. We had actually a very significant dip for the, where is my dollar index? Here we are. That's the daily chart. Just show you some trend lines over overall trends so far. Okay, we have seen basically the dollar in a I'm not gonna say free fall, but shifting from 110 down to 96 levels. So that takes us back to 2021, early 2022 territory. So more than 2 years lows for dollar, which is something that we could say that it was expected, because even if the aggressive selling was affected also by all this uncertainty and the tariffs. But in general, dollar was expected to decline this year because we were expecting easing of monetary policy, and you know that if central banks cut rates, that depreciates the country's currency. In this case, we have seen, so that was the main or the initial, let's say, driver. But on top of that, all this everything that happened so far this year just added in this sell-off, along with safe haven demand elsewhere to gold mainly, and occasionally to stocks as well. So stocks, just very briefly, I don't want to waste your time overviewing what happened in the very first half of the year, but I want to have some clarity. I want us to be on the same page, let's say. Okay, this is Dow Jones. I would like to see S&P 500 though. But especially for stock markets, guys, we have a complete reversal. We were on the downside, drifted significantly the very first quarter of the year, and then rebounded and returned back to the record highs. And for Dow Jones over here, actually, it passed above the record highs. It's currently posting new record highs, fresh record highs. So that's why I mentioned initially that for the second half of the year, focus is also on stocks, actually mainly in stocks. But I'm looking for my S&P 500. Just give me a second. So here it is, daily chart. Okay. S&P 500, sorry, is not there yet. It's not officially, has not officially broken the previous record high. Higher, as you can see, complete reversal in the second quarter of the year. The decline was for many reasons, as I said. Other than the central banks, it was also the threats from Mr. Trump with the extreme, massive tariffs being placed. Afterwards, it paused for 90 days. It paused the tariffs, but the tariffs have been paused in order to give time for deals to take place and negotiations to take place. But he paused. He announced the 90 days pause at the beginning of April, if I'm not mistaken. So until then, all these threats, all this in general, central banks in general, caused this drift, which was completely reversed. But this was responsible. This was the main reason, one of the reasons for the dip. Because imagine it's a chain, okay? Tariffs that cause a lot of problems to the companies, to the individual companies, tech companies, higher exports and imports. So that means, other than the fact that that adds to higher inflation, the tariffs also literally means more expenses, less consumption for the less exports, sorry, and imports actually. So it affects the trade policy of each country, affects the companies, the tech companies, everyone actually, heavy industry companies in general. So that's a negative factor on top of the uncertainty that we have from inflation perspective that was not improved as it should. So very, very briefly, that's why that led to and the earnings as well, which were like mixed. Neither some were disappointing, some were quite positive, but it was relatively mixed, causing this drift initially. I think the stock market has rebounded, and as I said, now we are near record highs for S&P 500 at least. For Dow Jones, it has the sorry the Dow Jones has already broken their previous record high. So after this, like ups and downs that we have seen the very first half of the year for the stock market, now for the second half of the year, the attention turns again. I'm referring to S&P 500 and Dow Jones and Nasdaq as well, but let's focus on the S&P 500. What could drive and could affect the stock market for the next 6 months will be the tariff fears. Okay, the 90 days pause is nearly to its end, so I think it ends on the 9th of July. So we are 10 days away, pretty much, working days if we just business days if we said if we so tariffs remains a key. It could remain a key driver for the stock markets. Okay, with S&P 500 currently flirting the record highs, the so far record highs. But in general, there is a lot of optimism regarding the stock markets for the next 6 months. Okay, so why? Okay, there are a lot of indications, let's say, and there are a lot of analysts, economists worldwide calling for a possibility to reach 6,500s. 6,500s. Okay, you all ask me about gold. Allow me, because today, other than the PC, is also a half of the year preview, let's say. So this is S&P 500. There are a lot of indications that if we remain, if the momentum, the bullish momentum sustains, the S&P 500 and Nasdaq as well, etc. The S&P 500 in this case could reach 6,500 by the end of the year. Okay, so basically, why is that? Remember that the market is always ahead on themselves. Okay, and for the second half of the year, the market has already started to price in better economic conditions for 2026. Okay, so with the tariffs chaos, let's say, eased for now, so it may have eased for now. There are some friendly talks, deals, some friendly footing in general between the US and the trading partners. So considering that the tariffs chaos has faded for now, that means, okay, that if things like are a bit stable from a tariffs perspective, it means that in the second half of the year, in the next 6 months, the Fed and in general the central banks can proceed with their rate cuts. Rate cuts means less expenses for the corporate sector, right? So that means that they could be well supported. We could see consumption rising, more sales, etc., etc. So that could be supportive supportive for the stock market, and precisely S&P 500, Nasdaq as well. Remember that S&P 500 also is an indicator, not the particular, but a bit of an indicator regarding the US economy. And if we consider the last growth indications that we see, the latest GDP numbers that we have seen from US, the data show a growth, okay, a growth has been seen in the second quarter and expected to continue. So we are expecting to see higher earnings, right? A more stable economy, US economy. So all this could support further the stock market, and we could eventually see S&P 500 shifting to 60, retesting the 6,500 territory. So in general, we could see a genuine bull market. Of course, have in mind that everything could change if, I don't know, suddenly, a deal has broken, or something, whatever, tariffs, the war. Considering the current conditions, there is a genuine bull market is expected for the stock market, at least. What else, guys? What else? Considering also the AI, artificial intelligence, and the development on that front, in general, the tech companies could help and support further the S&P 500 and the Nasdaq as well. And considering that inflation has shown some signs of a cool down, and the Fed could proceed with the Fed cuts in September. So all this just boosts the economy and provides further support to the S&P 500. Now, because you keep asking me about gold, okay, I'm going to shift to gold right now. So, okay, I'm going to get rid of all these lines, okay. Currently, obviously, we are at record highs. Okay, a bit shy, lower than the 3,500s, right? This is the daily chart, guys, for gold, okay? So we're like around 33, 30 territory, but considering the overall picture, we're not far away from the previous record high. So overall, the performance so far has been positive, right? The rally has been sustained. It's still in a bullish trend, overall trend in a bullish market. And as I keep saying, you need to always start from the top to the bottom. What I mean, this is the overall picture, right? I have drawn a trend line connecting my lows starting from the December 2024. And clearly we are still, regardless of these pullbacks, we are still in a bullish market overall for gold. So if I now focus on what happened in April, May, June, so the second quarter of the year, I can see it's not precisely a descending triangle, but it looks like a flag. Okay, comme ça. So lower highs, but higher lows, which is a good thing. So this formation will help you just to spot the breakout on the upside. So indication for further record highs, or if at some point, for any reason, it breaks below this 6 months trend, this 6 months trend line, if it breaks it, that would be an indication that we might see an overall reversal for gold. For the time being, there is nothing like that. There is a bit of an easing, some pullbacks, but still in track. In line. The trend line provides a great support. Overall, momentum has eased significantly. If you can see MACD in my daily chart, okay, but still positive, right? Okay, I'm gonna get rid of stochastics because it's the indicator that I'm using for the 30 minutes chart, so it doesn't really help us right now. So overall, we have a pullback the last 2 weeks, but overall picture is still positive. Now, I'm going to zoom into the 4-hour chart, right? These are Heiken ashes. You know me. I will try to put the candlesticks on for anyone that doesn't like Heiken ashes. But where we stand right now, okay, I'm gonna actually, I have another, let me just, okay, here is, that's not helpful, actually. Okay. Let's keep Heiken ashi for now, and now I'm gonna analyze it with proper candlestick, with the usual candlestick in a bit. So Tim, let's move on down to the 4-hour charts. I would like, though, to just a second to use my other, not this one, my other template. Okay, so I kept Heiken ashes. Okay, let me get, so 4-hour chart, indicator. Let me get rid of the object. Where's the correction channel? Delete. Okay. Let me put again my lines. So that's the, remember, when you apply trend lines, you need to at least have 3 points connected. Otherwise, it's not an ideal support or resistance level. Okay, over here I have 2. That's why I'm not so really happy about it, but it's just something to start with. Now I shifted into 4-hour chart. Okay, I'll try to go through all the time frames because we have scalpers over here, we have day traders, swing traders, price action traders, etc. So I'll try to do as much as I can, guys. So in the last 2 weeks, isn't it 2 weeks? Oh, yeah, relatively, we have seen a pullback away from 34.50 level down to 33 territory, round number, retested a bit the 3300s and rebounded. Okay, but it seems that, can you see it? No, you can't. My head is in the front. Let me just, okay, now you might be able to see it, but no, you can't. What I'm trying to show you is that we had this decline, right? Actually, I will just put RSI, 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 RSI. Okay, okay, okay. I've put the RSI just because I want to show you the MACD. We are in a pullback for the last 2 weeks, right? And MACD followed as well, right? Turned negative, so coincides with the decline. But the thing is that even with the with the slight rebound that we have seen this week in general, actually, this week we have seen a bit of a rebound. It was quite supported on 3300s and is currently at 3350 level. However, look at that. Can someone tell me? It seems the MACD, in MACD we have higher lows, which is negative. That indicates that the negative bias, the negative momentum, the bearish momentum is not over. It means that there are more bears than bulls currently in the market. So that raised the question, at least to me, saying that, so this rebound that we have seen since yesterday might be limited. And actually, this is also seen, this can be also proven from the RSI. RSI it holds below 50, and currently it's pointing lower. Also, the body of my Heiken-Ashi candles. You can see there's small body ones, not big ones like these ones, small body ones. And the latest high, the latest tail that we have is a bit identical. We don't have a higher tail. So, and we have a doji one right now. Okay, obviously it's not over yet, but that raised the question whether we are at the end of this rebound and whether we're gonna see further move on the downside. So that's a critical point right now for anyone that is trading US, guys. Oh, thank you, Shiraz. Thank you. For anyone that is trading the US session, that's something that you need to keep an eye on. By the way, we have PCE out, if I'm not mistaken. Let me see. Okay, so I'm gonna jump into the 1 hour chart, and it seems that there is a bit of a decline already. Okay, already. However, the Heiken-Ashis are not like we need the Heiken-Ashis in order to give us nice and good signals. They need to be other than the body. They must not, I mean, the tails matter, sorry. So if an indication that the price will go lower should be if and only if we have Heiken-Ashis with no tail at the top, like here. Over here right now, we don't have such an indication. We know based on our analysis that we have done in the 4-hour chart that something is wrong. The rebound, it might be over. It was limited. The MACD has posted in the 4-hour chart higher low, so bears are in control, but we need a trigger point, right? You can find a trigger point in a lower time frame. I went down one scale, okay, in the 1-hour chart. I don't see confirmation yet that a reversal, a pullback has started. Okay, an indication would be a combination of breaking below 3330 level along with a Heiken-Ashi with no tail at the top. Parabolics are already shifted, so that's good. RSI, it's a 50 and a bit flat. MACD is completely different. But yes, a confirmation could be seen for a possible pullback if and only if we see the a Heiken-Ashi with no tail at the top, along with the breakout of 3330 level. Okay, I'm not saying that it's a pullback. If this happening, could be a massive pullback that could affect the overall trend, the overall daily trend time frame. No, remember, we're doing some intraday analysis now. So if that happens, this could bring the attention and the focus back to 3300 or even the previous swing low at 32.95. But mainly 33.00, which is a round number as well. But we don't have a confirmation yet. We don't have an indication. You see that even the moving averages are a bit flat. Can you see? Sorry, I forgot to mention the moving average that I have. I have a 5, 9, and 16 exponential moving average solely for the 1 and 30 minutes chart, 1 hour and 30 minutes chart, but they are a bit flat. I mean, they point on the right-hand side. So, we're not there yet. We don't have confirmation for a pullback. The PCE are out, by the way. Sorry, GDP is out. And let me just refresh. Okay, GDP is out. Just oops, what happened? Where's my screen? Guys, just a second, something wrong with my screen. Oh, Oh, just a second, guys. Sorry. Something's wrong. I cannot see my display. What happened? Oh, switch off. Sorry. Switch off. For a reason that I cannot really understand. No signal. Okay, so never mind. I'm gonna fix it, but in the meantime, okay, I'll continue with just a single screen then, which is not easy, but I will do my best. So as I was saying, guys, I forgot where I left it. Yeah, so it seems that the data are out. Let's see. Tomorrow we have just today the GDP has been just released from the US, and tomorrow, where is my calendar? Where's the calendar? Where's my calendar? Sorry, just a second. Okay. Need to open the calendar. Perfect. So GDP for the first quarter slowed down. The annualized one. The non-annualized one actually grew a bit, 3.8 from 3.7%. Jobless and initial and continuing jobless claims really revised higher. Okay, that means it shows some kind of a pressure in the labor market, but not a significant one. Actually, they're a bit mixed. The average has slowed down slightly, but the actual weekly data, they have slowed down as well. Okay. So we have a revised up and a slow down at the same time. So that's a really mixed conditions in the labor market, not a clear indication of what is coming on the NFP next week. So, okay, that's just adding to the uncertainty around the NFP number. But, okay. That just adds further uncertainty, as I said, for the NFP next week. The GDP, it was quite disappointing, I would say. We have seen the trade numbers improving a bit, but consumption was really, really bad, really disappointing. And that was what led to the final first quarter growth data to show a decline, a significant decline, pullback. Okay, so it doesn't seem that this has affected significant the markets. Let's see. Can you still see my screen? Okay, yes, you can. This is a 1 hour chart in gold. I'm going to jump down to the 30 minutes, okay? So what we have, some uncertainty. The data were quite mixed. Anyway, the final GDP is not really an indicator. I mean, it's a past data release. So, however, it was right. It was really, really low. It shows clear slowdown, but and the jobless claims on the flip side, they show a mixed picture in the labor market once again. So that, I guess, is what is causing this uncertainty, along with the fact, obviously, that we are nearly the US is about to open soon. Okay, um, yeah, I cannot see any significant impact from the data into our market right now. I guess dollar will not be significantly affected either. Yeah, really continued sideways. So the data have been largely ignored, it seems, guys. The data have been largely ignored, um, which is not a surprise. So the focus remains for the US Open, at least, on Mr. Trump, actually. On Mr. Trump and the stock market in general. So why I said Mr. Trump? Because Mr. Trump is expected to name the successor to the Federal Reserve Chairman, Mr. Powell. So they are not doing great either. I mean, even the the very first term of Mr. Trump, they were always in a in a constant opposition. What is expected is that there are reports. Basically, nothing has been fully confirmed. It was something that it was reported by Wall Street Journal that he will announce or name who will be the next chairman in Fed by September to October. Even though Mr. Powell has another 11 months to end his term. So basically, Mr. Powell is a supporter of a more gradual approach, more data-driven approach, without seeing numbers, without having the data, without seeing changes in the data. He doesn't really want to proceed with any rush rate cuts or whatever. But Mr. Trump is the quite opposite, basically. He was calling for changing the tariffs like from the very beginning of his term, the very, very beginning. And he was like pushing for aggressive one, not like a data dependent approach, which is what Mr. Powell in general, the Fed, represents the last few years. It was always like that. But so, okay, let's get back to the markets. Nothing really happened. Nothing really changed. The data have not really affected the markets. We're seeing that muted reaction, not a significant one. So the main drivers will remain. Sorry. The main drivers for today will be, yes, as I said, the upcoming announcement from Mr. Trump regarding the naming a successor to Mr. Powell, but also the stock market, because we have seen Microsoft, Nvidia to new all-time highs. So we could see, as soon as the U.S. market opens, the U.S. session opens, we could see further boost for S&P 500, for NASDAQ. So, yeah, it has already supported during the Asia and European session. but you know that the volumes are way higher as soon as US market opens as well. So yeah, everything points to a really positive US open for Nasdaq, for S&P 500, for Dow Jones. So have this in mind, guys. Let me see the questions, if you have any questions, by the way. Is there anything else that I'm missing from data perspective or news perspective? Actually, I have plenty of moves. I mean, other than the higher US stocks, other than the fact that also we have seen platinum jumping to the highest since 2014, other than euro dollar, pound dollar. No one asked about euro dollar and pound dollar. I mean, dollar currently is at 3 years lows, as I said. Stocks are on the upside. Everything, all these are due to the Fed pressures from Mr. Trump, and because the investors are now like focused on the trade deals and the upcoming end of the tariffs pause. So all these support the stock, but adds further selling pressure on dollar, right? So especially with Mr. Trump keep calling for cut rates. So he literally stating again and again and again that we need Fed to cut rates faster. We need to cut. So all these callings are just adding to further decline to this adding to this pressure on dollar. Okay, so let me just jump into the dollar. I'm gonna put the 1 hour chart. These are proper Heiken Ashi candles. Proper candlesticks, Japanese candlesticks. We have seen a bit of a 1 hour chart, by the way. We have seen a bit of a easing, a slight rebound, a limited one. Everything points to further decline, right? The asset is below the 50 and 200 period moving average. MACD is way below, far away from zero, negative. RSI is negative at 35 and points lower. So even if I put the 30 minutes chart, you can see something similar. I mean, temporary jump, which cannot even consider jump, but temporary rebound during the European session, but as we move closer to the US session, we are seeing a pullback. Yeah, and everything points to further decline. I'm going to put the other setup, the 5 and 9. Where is it? So here's another setup that I have using Japanese candlesticks. So the moving average present 30 minutes chart dollar, by the way, guys. Okay, moving average have flattened, indicating that this rebound is over, right? Bollinger's point lower. Moving average, MACD just shows a clear bearish bias. Stochastics over here, can you see that? Stochastic over here has just provided a bearish cross, indicating the possibility of a return back to the lows of the day, 96.50. Okay, as the low of the day, 96.50, 59 to be more precise. RSI also negative, so everything suggests a pullback. Even if I put, let's see the Heiken Ashi, okay. So positive, doji, another doji one, okay. MACD is negative, so we basically wait and see stance with immediate support. Let's see, so yeah, basically it should be here, 96.81. Or until you have this kind of a clarity like this yesterday afternoon. in which in the US Open we had seen a doji candle indicating that the rebound is over, and then we had consecutive bearish Heiken-Ashi candles without any tail at the top. So if something like that happens today, then that opens the door further on the downside with the very first support level on the day's low, and then the next levels. I mean, if that breaks, if the the low of the day breaks, then that could open the door to around $96 and even 95.85 level, which is the 161% Fibonacci expansion, guys. Unfortunately, the data didn't really affect the market. They haven't caused a lot of volatility. I guess it's on the US Open and Mr. Trump's push for rate cuts and choosing who is the next chairman. And stocks, they found some ground, not only because of the rally that we have seen from Microsoft, Nvidia, Micron Technology, etc., but also from the fact that we have a ceasefire. So the ceasefire provides a relief rally to the stocks, okay? This is a relief rally. They take a breath, basically. Let me see your questions. Not part of the trip, but where are you from initially? Curious to your accent. My accent is awful. My accent is awful, Shiraz. I'm a Cypriot, okay? Cypriot. Greek Cypriot. Hopefully, I'm not bothering you. I'm not really. My accent is not so difficult. Hopefully. So, if inflation increases, could we see a slightly weaker dollar? No. Wait a bit. Okay, you said if. Yeah. Sorry. Yes. Okay. Yes. Actually, yes. Even though markets are always ahead of themselves already, right? So they okay. Lower inflation. Okay. Suggest that the Fed could basically, in order the Fed to cut rates, it needs to see, it needs to see a quite stubbornly high inflation. Okay, in order to control inflation, not to stay sticky and high. A way to achieve that is by cutting rates. So a weak inflation, it will be an indication for the Fed that, you know what, you don't need to cut rates. It's already slowing down. So no action is what will, weaker inflation will indicate no action from the Fed. Okay, so that will be dollar positive and not dollar negative. Do you get it? The Fed and in general the central bank started cutting rates because inflation was really, really hot, really, so they needed to control things because it was affecting. Oh, sorry. It was getting to levels that we have seen recession conditions, stagflation conditions, and etc. So, just a second. So, if inflation rises, okay, the central banks theoretically increases interest rates, okay, in order to slow down the price growth. But if the central banks so central banks in general, okay, globally, they tend to increase rates in order to cool things down when inflation is really, really heats up. So if they cut rates, it's the vice versa scenario. Okay, so hopefully I haven't confused you. Let me take it one more time. Let me. So the central banks cut rates, okay, in order to boost economic activity. Economic activity is boosted during inflation, during weaker inflation. Okay, we have seen some improvement overall from inflation. I mean, if you go back on where we were standing last year, we have seen some slowdown. But that's why the central banks cut rates, and the Fed cut rates. But it stopped for a while to cut rates because inflation was either holding stable, or there was some higher monthly readings. So they were like, okay, what's going on? Shall we proceed with further rate cuts, or let's just wait and see? So currently we are on the wait and see stance. Currently, what it needs to be done in order for the central banks to keep reducing interest rates is to see inflation getting closer to 2%. I think the target remains at 2%. Let me double check. 2.5 was it? 2%. Let me see the current inflation, US, where we're standing. Where are we standing? So there was some ups and downs lately with inflation. In May, it's 2.40. Yep. But it's not the only thing that keeps Fed a bit stable for now. It's also the US debt. The US debt, that's also something that adds further to the uncertainty for the US economy, and something that the Fed is really keeping a close eye on. So currently, where is the numbers? Okay, I cannot find the latest reading. What's the latest reading? I think it's 2.4. Not quite sure. Yeah, but a lower inflation is an indication that they could keep policy unchanged. And in line, stable inflation or a higher inflation is calling for rate cuts. Okay, so it's the quite opposite of what you said. And a good indication for inflation is tomorrow's PCE. So the focus is on the PCE tomorrow, which is anyway the Fed's favorite indicator. So let me just find, I think, Forex Factory. US inflation. Where's US inflation? US inflation. Previous US inflation. By the way, the next inflation is the second week of July, if I'm not mistaken. But, okay. So last month, the latest inflation figure that we had, it presented a slowdown in the monthly reading and a slowdown in the headline as well, in the yearly reading as well. So that's why no action needs to be taken yet from the Fed. Okay, no action needs to be taken yet from the Fed. but everything could change. I mean, once we see tomorrow's reading, for the time being, a possible rate cut is seen in September, but the odds are not so good. Okay, so let me check the questions. But remember, dear Shiraz, inflation is not the only thing, and rate cuts is not the only thing that drives the dollar right now. I mean, that drives the dollar lower. Okay, so yes, you're right that they are inversely correlated with gold. But remember that especially this year, there was a lot of safe haven demand for gold. So it wasn't purely dollar driven, sorry. Yes, of course, we have weak dollar. That's why we have seen positive gold. But there were like days and some weeks that they were not in line, that it was absolutely out of their correlation. So uh, it's also the uncertainty and the safe haven demand rather than the dollar weakness. Obviously, dollar weakness, as I said, is not mainly affected. It is overall affected by the rate cuts, obviously, but sorry, I lost a bit what I was supposed to say, what I was thinking to say. Never mind. Okay, so so the dollar has also been sorry. Whew. The dollar was also it was also pushed to these 3 years lows due to the tariffs as well. So it wasn't purely inflation; it was also the anticipation, actually the fear of how tariffs could affect inflation. I know it's a bit confusing, but yeah, the higher the impact from tariffs into the inflation was expected to keep inflation higher, right? And in general, the Trump's policy. So that is what uh, led to the market participants to speculate rate cuts ahead of time, and that's why we have seen dollar lower. Does this make sense? Let me check the chart. Does this make sense, dear? It's Andrea. My name is Andrea. I think I had it somewhere. Okay, let me know if it does make sense. What's next? What do you want me to cover, guys? Because I'm already an hour live and I would like to run it up a bit. Very, very important. Keep an eye on tomorrow's data. The PCE is, as I said, is the Fed's favorite indicator. If we see any higher than expected number, okay, that could pressure low the pressure, add further pressure on dollar. Okay, so yeah, all the attention could turn on the PCE soonish. Obviously, we have plenty to see tonight. We have our attention is on the Middle East still, on Mr. Trump. But from data perspective, PCE tomorrow could add significant volatility into the market, into the dollar, into the gold as well. But overall, as you can see over here, the dollar remains under pressure, basically. We just need a technical confirmation. No one asked about euro, dollar, yen. I find euro, dollar, pound, dollar really exciting, actually, because regardless of the differentials, of the yields differentials, we are seeing basically, okay, it's not also due to the yield differentials, but we are seeing remarkable, I mean, a really strong bullish trend in both euro dollar and pound dollar as well, which is coming a bit in contrast with the fact that UK is in stagflation picture, is in a stagflation condition. Europe is facing recession as well. So this comes in contrast. But what is going on here is not that we have a strong euro or a strong pound, but we have less weak euro and less weak pound compared to dollar. Okay, and we have some nice moves. I mean, overall, a clear uptrend. So broken. This is a 4-hour chart for cable. 4-hour chart for cable. Okay, so it broken on Monday, was it, or yesterday? I think it was yesterday night. It broken the previous 3 swing highs that I had. This is a 4-hour chart on pound. It broken it, and since then is extending higher. It seems that we need a bit of a correction right now. You can see that the tails are lower. The parabolic SAR got closer to the price. Stochastic has a bearish cross. So what that indicates? It indicates that yes, we are still in on the upside. We're gonna see further move on the upside, but it needs a bit of a correction right now, or at least a consolidation. So right now, you need to keep an eye on. You need to check actually whether it will consolidate, whether the correction will be in a form of a consolidation before another move on the upside, or whether we're going to have a pullback, retesting the previous swing high before resuming back on the upside. Overall picture for pound, for euro, it remains on the upside. So this pullback that we have seen the last 3 hours looks like a correction, either in the form of a consolidation or a temporary pullback. So immediate support could be seen at 136.95 level. If that area breaks, the next support level is down to 136.40. Okay, but as long as the asset remains above 136.40, this could be a buying the dip. We could see buying the dip conditions, right? Because overall is well supported. So the momentum is still positive. Euro. Very briefly, similar picture overall to the upside. Just a second. I'm gonna zoom into the 1-hour chart. Very similar, as you can see. I'm gonna go down to the 30-minute chart. So we have a pullback, right? But can you see that for 2 hours in a row, the lows are like so it was unable to extend lower, and we have a doji candle, and another doji is being developed, but that needs another 30 minutes, another 20 minutes to close. So what that suggests, it suggests that the pullback might be over, and we might see a reversal on the upside. I mean, a rebound on the upside, but in this confirmation, okay? In its confirmation, and we need a bullish bearish candle, a bullish high candle candle, and a move above 117.20 level. Let me check. Our economic calendar is quite on time. I mean, there is no delay. The FX the HFM economic calendar, but if you don't if you find, if you're like you feel that it is not on time, even though I'm using it and I'm quite happy with it. What else? Forex Factory maybe, but I think every single one of them is, it has like it released the announcement like in seconds. Okay, the best and on time uh, uh, way, let's say, without any delays to get the data, obviously, is Bloomberg TV, live Bloomberg TV. So I'm not quite sure if that is. I mean, it's a matter of seconds, to be honest. Yeah. So, guys, I think I'm gonna wrap it up since I don't have any questions. Oil remains sensitive. I don't know whether you're interested in cryptos. We had a bit of a pennant. It looks like a pennant. Like we have some kind of a, sorry, needs to change the standard deviation. So we have a bit of a pennant. Let me just use a different one. No. Regression one. Yeah, much better. Much better. So we have a bit of a pennant. So we want to, so in order to indicate that Bitcoin will continue on the upside, let me just fix this. We need, we need a clear breakout of 10, let me just be precise, 110,500, 110,500 level needs to be broken, and the price must extend above this channel in order to suggest that Bitcoin could, we could see actually Bitcoin extending further on the upside and actually having new record highs for Bitcoin. So in a pullback, in a down channel for the time being, so a failure to extend higher could indicate a reversal back to the 100 territory or 96 territory and so on and so forth. Have you seen this? This is gold that we were talking about earlier. Remember that I told you that 33 is a key level to be closely monitored? It has been broken, massively broken. So all the attention now is on the previous lows. So that means 33.11 and 32.98, 95 level. So for anyone that had a pending order in place over here, that was already triggered. And well done if you have set a pending order. So yeah. Yeah. It was triggered indeed. It was triggered. It was expected actually, considering the bearish bias and the limit that basically rebounds. Okay, guys, I'm gonna call it a date. Oh, sorry, Zubisus. Ripple. Okay. Yes, for sure. Oh, nice. Thank you for bringing that up, Zibusiso. So Zibusiso asked for Ripple. Okay, Ripple. Nice breakout, right? This is a 1 hour chart, right? 1 hour chart, Ripple. And we had a lot of consolidation the whole week. So I'm going to put it with a, let's say, yeah, like that. But not great, but okay, a lot of consolidation, right? Sideways. Nice support at 216.20 level. And for the past 4 hours, it was moving lower until it broken just earlier. When did it broke it? It was like 30 minutes ago. Okay, 30 minutes ago it has broken this support level, the week's support level, this week's support level. It has broken. Nice high Kanashi candles, bearish without any tail at the top, indicating that the bears are in control, even if it's for a limited time, but they are in control because there's no tail, right? There is no tail. at the top. MACD turned negative, stochastic holds negative, no indication of a reversal. So it seems that there is further room on the downside with with the next immediate support level. Sorry, back on these swing lows. So that means 113.85, 113.18. Let me just. I want to check something else. Yeah, okay. The overall outlook, the overall bearish. Just a second. I shifted to the daily chart because I want to put the long term, let's say, support and resistance levels. So in the overall time frame, the momentum is a bit neutral. So okay, 1 hour. Negative, turn negative. Stochastic suggests that there is further room on the downside. So yeah, guys, it seems that parabolic SAR, the high Kanashi candles for the 30 minutes chart, 1 hour chart, MACD, and stochastic, they all indicating that there is further room on the downside. If you have spotted this, my dear Zibushisho, 3 hours ago, that's good for you. Good for you. Good for you. It seems that there is further room. There is still some momentum bias still holds on the downside. You can see that the body of the candles are getting higher and higher. There is no doji or bearish high Kanashi candle yet. So that means that there is further room on the downside for the short-term time frame. Though, remember, I'm in a 30 minutes chart. I'm in a 30 minutes chart. So yeah, have this in mind. And thank you for bringing that up. Guys, I'm going to call it a date. Thank you very much for attending. For anyone that has just joined, don't worry, because the video stays in our social media in YouTube and Twitter. So you can scroll. I mean, you can take your cursor and go back at the beginning, or just go and put the cursor exactly on the asset that you want to see, on gold, on S&P 500, euro dollar, pound dollar. I didn't manage to cover oil, unfortunately. Yeah, nonetheless, have a great day ahead. Take care. And trade always what you see and not what you think. Okay? Thank you very much. Even if the markets don't make sense, if you don't understand the fundamentals, rely a bit on your technicals. Do your homework, find support and resistance levels. Try to read your candles. Okay? Thank you very much. Have a great day ahead. Take care. Thank you. Bye bye.